It is time now for our stock of the hour. Shares of XPO Logistics jumping in today's session. This comes after announcing its plan to split its freight brokerage and North American trucking operations into two public companies. Joining us now is the CEO, Brad Jacobs. Brad, thanks so much for your time. Talk to us about the reason behind this move, the logic behind this move. You're just trying to unlock value.
First of all, thank you for inviting me onto the show. I appreciate it very much. We're trying to unlock value for both customers and for shareholders. So for the customers, we found with the spin of GXO last year, when management is focused just on one thing and concentrates on that one thing, they manage the business better. We found out also that shareholders, when they have an opportunity to invest in a pure play, are more interested in it. So here now, we're spinning out our asset-light, technology-enabled truck brokerage business from our asset-heavy but high ROIC, less than truckload business, which is levered to the industrial economy. So this will be good for customers, and it'll be good for shareholders.
You know, when Matt and I hit the road, he always jams the van, and I travel light. So I guess if I were an industrial customer, a less than truckload customer, Brad, doing some of those shorter trips in various parts, let's say, the United States, how is business right now? How would you characterize what's going on with the business?
Well, business is going very well. In the less than truckload business, we're in the early stages of the industrial economy recovering. So you look at our truck brokerage business, which is more levered to the consumer, that's healthy and farther along. In our LTL business, which is levered more to, say, manufacturers, it's just getting going. It's not as advanced as the consumer. Very strong pricing environment, double-digit pricing, probably the best pricing environment ever in LTL.
In terms of the truck business, you know, how difficult is it right now? We hear constant stories about a shortage of labor, and they often center around a shortage of truckers. How much demand are you seeing right now, and are you able to fill it?
Well, there is a shortage of truckers. We've addressed that we have over 130 driver schools all across the country. And last year, we graduated about 900 drivers from that. This year, we're shooting for 2,000. So we've ramped up our capacity for the driver schools. A couple advantages from that. Number one is we have drivers. Number two, they seem to stay with us for a longer period of time. They're more loyal. And number three is their safety records end up being better because we train them right from the beginning.
And Brad, we're also going to be watching very closely the road ahead for your European operations. And as we watch the headlines unfolding tied to Ukraine right now, I guess a lot of people are trying to figure out all the moving parts in Western Europe. What are you watching closely?
Well, on the subject of Ukraine, we don't have any business in Ukraine or in Russia. We do have 66 Ukrainian drivers who work for us in Poland. And I got to tell you something really interesting. All but 3 of them went back to Ukraine to help their families leave, knowing that all of the ones, which is most of them who aren't over 60, are going to have to stay and fight in Ukraine. So the resilience and the determination of the Ukrainians to save their country is quite impressive. But we don't have any business in the Ukraine or Russia.
In terms of the commodities volatility that we've seen, Brad, how do you deal with that? How do you confront that as a business leader?
Well, the main commodity that we're exposed to is fuel, and we're a big purchaser of fuel. That hurts us and helps us. It hurts us in the sense that when oil prices go up, that's not good for the economy, and a better economy is better for us. It helps us in the sense that that's a pass along to our customers, and the cost plus is on a higher cost, so we make more profit on that.
And before we let you go, Brad, just in terms of the investor base, as you have these different options for your investors as you're seeking to unlock value, do you see a lot of differences emerging from that, or do you anticipate it's going to be just an opportunity for those investors to have more of a pure play opportunity?
Oh, I think the former. I think there'll be a big change in shareholders because there's so many investors who only want to buy an asset-heavy, high ROIC company like an LTL carrier that's leveraged to the industrial economy, but they don't want a tech-enabled truck broker that's levered more to the consumer, and vice versa. So I think there'll be some big turnover in the shareholder base.
Okay, a lot to watch for. Brad, thanks for your time today. Brad Jacobs, the CEO of XPO, joining us on their big developments today.